All right, let's dive into one of the most important but maybe most misunderstood ideas in all of trading, your risk tolerance. Honestly, this is the hidden engine behind every single successful strategy. And, getting it wrong, it's pretty much the fastest way to blow up your account. So let's pull back the curtain and figure out how to get this right. It all starts with a question that I bet sounds really familiar. You've got a solid plan, you've done all your homework, but then the market turns against you and it's like a switch flips. You make a move driven by panic or greed, and boom, it costs you. So why does this happen? Why does it happen to really smart people? Well, the answer is right here. It's in the real definition of risk tolerance. And I want you to look really closely at those two words, able and willing. See, it's a two-part deal. It's what your bank account can physically handle, and it's what your mind can emotionally handle. And the battle between those two, that's where pretty much every trading mistake is born. Okay, so here's our game plan. First, we're going to uncover that common blind spot that gets everyone. Then we'll do a reality check on your finances and on your psychology. After that, we'll figure out how to find your true risk level and, this is the most important part, how to align your strategy with who you actually are. So let's start with the heart of the problem. This isn't about some fancy new indicator, it's about avoiding this basic, fundamental mismatch that trips up so many traders before they even really get going. Think of it this way. It's like trying to run a marathon using a sprinter's training plan. It's never going to work. When your trading strategy demands a level of risk that your wallet or your emotions just can't back up, you create this internal war. And in that battle, your brilliant plan is the first thing to go right out the window. And here it is. This is the big blind spot. It is so easy to be a hero on paper, right? It's easy to say, oh yeah, I can handle a 20% drawdown when your account is sitting at an all-time high. But when you're actually in it, when you're watching those numbers bleed red day after day, that theoretical courage just evaporates. And that overconfidence, it's a trap. So how do we start to fix this? Well, we start with the cold, hard truth. We need a financial reality check. Because the numbers, unlike our emotions, they don't lie. And this slide just lays it out perfectly. These are the two pillars you're building on. Financial tolerance, that's just the math. It's the objective, black and white calculation of what you can lose without wrecking your life. But psychological tolerance, that's the feeling. That's the subjective gut check of what you can bear to lose without losing your sanity. You've got to solve for both. So let's get brutally honest for a second. Ask yourself these questions. Is the money you're trading with really risk capital? Or is it kind of sort of tied to next month's rent? Do you have a real safety net? A legit emergency fund totally separate from all this? Are you trying to trade aggressively while you're swimming in high-interest debt? Answering these questions grounds you in reality. Okay, on to the other side of the coin, and this is often the trickier part. We've checked the wallet, now let's stress test the mind. This is all about your emotional grit when things inevitably go wrong. You know this right here. This is the ultimate barometer. Forget the complex formulas for a minute. If you are lying awake at 3 a.m. staring at the ceiling, thinking about your positions, or you're constantly checking your phone with that knot in your stomach, you are over-risked. Period. Your body is telling you something your ego doesn't want to admit. So let's dig a little deeper. Think back to your last bad losing streak. Did you feel that urge for revenge trading, like you had to get your money back from the market? Did you start making sloppy calls that you knew were bad ideas? Did you just completely ditch a solid strategy because of a totally normal drawdown? Those are your emotional breakpoints, and knowing what they are, that is a superpower. Okay, so you've taken a hard look at your finances and your feelings, but here's the piece of the puzzle that so many people miss. Your risk tolerance isn't some number you find once and then carve into stone. No way. It's alive. It's dynamic. It changes. I mean, just look at your life stage. When you're in your 20s, you've got fewer responsibilities, decades to make money, you can afford to be more aggressive. But fast forward to your 40s, maybe you've got a mortgage, a family. That same level of risk might just be reckless. And then in your 60s, the name of the game is preserving capital, not wild speculation. Your strategy has to evolve as your life evolves. So here's the bottom line. A big life event changes everything. A new job, a new baby, a brutal bear market. These things can and absolutely should change how much risk you're willing to take. You have to schedule regular check-ins with yourself, at least every quarter or anytime something major happens in your life to make sure you're still on the right track. And all of this leads us to the final and really the most powerful part. We've done all the diagnostic work, so now it's time for the prescription. How do we take all of this self-knowledge and actually turn it into a concrete, profitable trading plan? This table just lays it all out. If you did that self-assessment and you landed in the low tolerance bucket, your mindset is all about preserve my capital. So a strategy like long-term trend following makes a ton of sense. If you're more in the medium camp, trying to balance growth and risk, then something like swing trading could be your sweet spot. And hey, if you've got the cash and the stomach for high tolerance, then yeah, more active stuff like day trading might be a good fit. The whole point is to find your row on this chart and just live there. And really, that's what this is all about. It's about finding that perfect balance. You want a strategy that challenges you enough to actually grow your account, but not so much that it's costing you sleep or forcing you to make those dumb emotional mistakes. It's that sweet spot where ambition meets peace of mind. So, I'm going to leave you with this one last question to really think about. Take a good, hard look at how you're trading right now. Is it built for the person you actually are, with your real-life finances and your real-life emotions? Or is it built for some idealized super trader you saw on the internet? Answering that question with 100% honesty, well, that's the first and most important step you'll ever take.